In this video, I will share 3 different trading strategies, one intraday trading strategy, one BTST trading strategy, and one positional trading strategy. But I will share in a different order. First, I will share positional trading strategy first, and then the BTST trading strategy, and then the intraday trading strategy, because the noise is less in higher time frame and there is a higher probability of getting success in the higher time frame, like a positional trading strategy and then the BTST trading strategy and then the intraday trading strategy. Friends, please note, strategy is only one aspect of the game. Money management rules like risking only 1% or maximum 2% of your capital per trade, that rule is very important. Also, trading psychology is also very important, and the continuous execution in different market condition is also very important. So basically, strategy, money management rules, trading psychology, and execution. So these are like 4 legs of a table. Then only you will get success in trading. So without wasting much time, let's jump into the wonderful world of trading strategies. My first trading strategy is on positional trading strategy. So in this positional trading strategy, we need 3 indicators. So 2 moving average indicators and 1 is RSI indicator. So using 3 indicators is not possible in trading view because it supports only 2 indicators for free version. So if you are a pro account, then only one can use 3 indicators. So right now I don't have a pro account, but I always suggest not to spend too much of money on the tools, especially related to trading, because the cost of trading execution is very high now. So I can easily take the pro account, or I can use any broker account and I can use the trading view and I can explain the strategies. But instead of that, what I do is I will go to in.investing.com. So this is also, it looks very similar to trading view, but it supports using 3 indicators even for a free version. So this is a free account. So in this way, I can use 3 indicators. So that's why instead of TradingView, I'll be using this in.investing.com to explain this positional trading strategy. Okay. So now the strategy rules are very simple, friends. Always note that when I say positional trading strategy, there is a difference actually. Okay. So when I mean intraday trading strategy, it is like buying on the same day, selling on the same day, right? Now, when I say BTST trading strategy, it is like buying today and selling tomorrow. Okay, it's not today itself, but selling tomorrow or maybe one day later also. So that comes under BTST trading strategy. So when I say positional trading strategy, it is for a long term. It is like buying today and selling maybe after 2 weeks, 3 weeks, or maybe after a month, or even maybe after 3-4 months until you get the exit. It is like minimum 1 month, minimum 3-4 weeks holding period is positional trading strategy. Okay, so now whatever I'm going to explain as part of this strategy, it comes under positional strategy, which means with a minimum holding period of minimum 3 to 4 weeks. Okay, so if you don't have that appetite, okay, holding period of 1 month or at least 3 weeks, then you should not take trades under this strategy. Okay, so that's one thing. And second thing, always remember, when you take a trades under positional trading strategy, it involves gaps risk, right? Because in overnight anything can happen. So always ensure not to invest more than 10% of your capital per trades in positional trades, which means suppose if you have 10 lakh rupees, let's say you got a trade in XYZ stock. So you should not invest. I'm not saying risk. Listen to me very carefully. You should not invest 1 lakh. You should not invest not more than 1 lakh to XYZ trade, which means let's say XYZ is trading around 1,000 rupees. So you need to buy, which means you need to invest only 1 lakh rupees for this strategy, right? Which means you can buy only 100 shares of XYZ. So in that case, it becomes 1 lakh. Okay. So don't think that we are investing or we are risking complete 1 lakh here. Why? Because so when you're taking a trade at 1,000 rupees, your stop loss may be at 950 rupees. I'm just taking an example. Okay. So your stop loss is at 950. If something goes wrong, if the price opens below 950, that's a different story. But in most of the scenarios, your stop loss will be at 950, which means you're taking a risk of 50 points into 100 quantity, which means your risk is 5,000 rupees. Okay, so your investing amount is 1 lakh rupees, but your risk per this trade is only 5,000 rupees. Suppose if the price opens below 950, then you have to exit. Okay, you are not supposed to hold the trade below 950. That's how many traders convert long term investors for many waste companies. Okay, I hope this money management part is clear. Now what I do is I will go to the strategies part. Okay, so this strategy consists of three indicators, as I said earlier. So one is 5 period EMA. Okay, so another one is 50 period moving average. Okay, so next one is RSI indicator. Okay, so now what I do is, so RSI basically I will plot 60 and 40 levels. So anything above 60 is bullish in RSI, anything below 40 is bearish as per RSI, and if the RSI stays in between on 40 60, we can expect or we can notice sideways move on the price chart. Okay, that's why I'm using RSI. Basically I'm using RSI indicator to scan the bullish stocks. Okay, that is one thing. And why I use 5 EMA and 50 EMA is, so 50 EMA is the average of last 50 trading days. I will be using this in a daily charts. So what happens is it gets the average of last 50 days of the activity. So 5 EMA is short term, the last 5 days average. So let's say this is 50, and I'm taking long trade whenever the 5 EMA breaks above the 50 EMA. Okay, so whenever it does like this, so what this indicates is, so 50 period activity is going on, but 5 period EMA is breaking 50 EMA, which means in short term, it means in last 5 days something happened, something bullish happened, and there is a higher probability of price continuing in that direction. Okay, so the entry rules for this trading strategy is very simple. 5 EMA should break above 50 EMA from the downside. That is one thing. And at the same time, RSI should break above 60. One day before, one day after is fine. Okay, it means today after the market close, 5 period moving average crossed above 50 period moving average. Okay, yesterday itself RSI is above 60, then it holds good. Or today 5 EMA went above 50 EMA. Today itself RSI crossed above 60, which means it's closed above 60, 61 like that. Then also it is fine. Let's say today that moving average 5 EMA crossed above 50 EMA, but RSI didn't cross 60 today, but RSI crossed tomorrow, just one day after. Then also this trade holds good, which means you need to take the trade only when 5 EMA crosses above 50 EMA and RSI crosses above 60. Okay, so that is the basic rule, entry rule. Okay, and for the exit rule, we don't consider the RSI. We consider whenever the 5 EMA crosses below 50 EMA, closes below 50 EMA, you have to exit. Okay, so this is the entry rule, this is the exit rule. Okay, I will plot on the chart and I will also show some of the examples. Okay, so basically I will go to indicators. I will plot RSI first. So in RSI, as I said, I will mark only 60 40. I don't need 70 30. Anyway, 40 we know we don't need because we need only 60, but still I'm marking it. Okay. I think if something went wrong, RSI. I will go to the settings. I will change it to 60. I will change it to 40. So this is one thing. This is fine. Okay, so line with breaks, histogram, I think this is fine. Okay, so now what I do is I'll plot two indicators, moving average. Okay, so now I plot EMA Moving average exponential. Some people ask, Indra, should I use EMA exponential or should I use moving average simple? So there is not much difference, friends. EMA gives a little extra importance to the recent market activity. So EMA is fine. If you want to use SMA, that's also fine, but stick to one, okay? Don't use one simple average. Don't use another exponential average. Pick either exponential or simple moving average. That will be fine. Now, okay, I will change this to 5-period moving average. And I will change the color to green so that it gives an indication of buying. Okay. And I will increase the line width. Line width will be usually little lesser in this case. Okay. So now we'll add one more EMA to plot 50. Okay. In this case, what I do is I'll change the inputs to 50 and I will change the color to red so that we can get very good clarity. Okay. Okay. Now the rules are very, very simple, friends. Whenever the price, whenever the moving average breaks above 5 MA, breaks above 50 MA, if the RSI is above 60, we will take the trade. See, for example, this is Nifty. Okay, anyway, we don't, it's not possible to take the trade in Nifty like equity. ETF, anyway, we can take in Nifty base, but I'm just taking an example, okay? So see here in this particular day, EMA didn't went above 50. In this case, in this particular day, so 5 EMA closed above, 50 EMA, right? So, and RSI is 57 actually. But the next day, RSI is broke above 60, right? You can see RSI level, you can see here, right? Okay, in this particular day, price EMA went above, 5 EMA went above 50 EMA. Okay, so you can see the EMA levels here, right? Okay, you can also see the levels here, RSI levels here. So in this case, 5 EMA is above 50 EMA. 5 EMA is 23,082. 50 EMA is 23,056. So EMA rule satisfied, but RSI is 57. So RSI rule is not satisfied. So as I said earlier, just one day before, one day after, that's fine. So if you look at here, the next day, price went, the RSI went above 60, right? So this qualifies the entry. So on next day, on this particular day, you can take a long trade, keeping a stop loss above, at this point of time, this crossing, this price level. Okay. So this is the entry rule, and exit rule is until it crosses downside. Okay. So right now exit is not yet triggered. So still we will be holding a trade. So please note, friends, this is a trend capturing trading style. Okay, it captures a big trend. So in that way, you should have a lot of patience to take the trade. Okay. So in this case, it would have triggered the stop loss. You would have taken the trade, but that's fine. So you get a lot of trades like this. You can see here, RSI didn't break above 60. Even the price crossover not yet happened. But if you see on the next day, see here, EMA, 5 EMA crossed above 50 EMA. RSI is 59.6. Okay, 59.6 is okay, chalta. You can take the trade on the next day because 59.6 is close to 60. Or you can also wait for one more day and then you can take the trade. If you have taken the trade here, then still you would be carrying the trade, right? So we'll go to some stocks example. Okay, I'm not sure. It's quite of hanging actually. Not sure it is a mistake of my system or the in.investing.com. So let me check. So this is an example of TCS actually. See, in TCS case, what happened is, you got the crossover in this particular day. Yes, crossover happened on this particular day. So you will take a long trade above the high of that particular candle. Anyway, RSI has also crossed above 60 on that particular day. See, in this case, you will be holding the trade until the crossover happens. See, I think you would have exited here. You made little profit. So right now, here also there is RSI is close to 60. If you would have taken a trade here, means your exit is here. It's almost a break-even trade. You would have not made any loss here. So right now we don't have any trade. So if you go in the past, also see here. Here the moving average crossover happened, but RSI didn't cross 60. So you might be wondering why I have included RSI 60 in this rule. Because in this strategy, the crossover strategy, what happens is whenever there is a sideways market, there is a possibility of the moving average crossover happening. Okay, in this case happened here, see here, but RSI is not above 60. That's how we avoided a failed trade, right? So that's why RSI plays a very, very crucial role. See here, RSI, the crossover happened here. RSI is above 60, 59.7. That's okay. That's fine. Our next day. So you will take a trade here. You will be holding the trade till here, right? So you would have made a profit. So once again, in this case, here, I think trade didn't trigger here because the RSI is below 60. So it didn't cross above 60 here in this crossover. So you would have not taken the trade. That's okay. You missed it. That's fine. Okay. So you go to any stocks like this. If I go to, for example, even if I go to Reliance, okay. So even if I go to Reliance, you can check it catches wonderful trading moves. For example, let's say here in this particular day crossover happened, right? You can see the values here, and you can also see the RSI crossed above 60, which means 60.3. So you would have taken a long trade at this point of time, somewhere at 1193 levels. So you will hold the trade until this crossover happens. So crossover happened somewhere here. So you will be holding the trade till 1433 something. Okay. So here once again. The crossover happened here again. See, there is a trade here, so it would have made a small loss because the crossover happened once again here. So that's fine. Once again crossover happened here, but RSI is not above 60 in this case. See here, the crossover happened here, RSI is not above 60, so you would have avoided the failed trade here, right? So that's how it works actually. Okay, so you can go to any stocks. For example, see here in this case, uh, lot of sideways markets here. It is a sideways market, right? It is a sideways market. As per EMA there is an entry, but if you look at RSI, it didn't trade above 60. That's how you can avoid the trade. I can also show some more examples, like for example, I go to SBI, State Bank of India. Even if you see here, for example, there is a trade here, there is a trade here, right? There is a trade here. You would have exited the trade here. That's fine. Once again, the trade is here, or if you're not triggered, it's fine. Okay. Uh, there is a trade here, maybe, or if RSI is above 60, you would have exited here, little profit. There is a trade here or here. Okay, you would have taken a trade here or here. Here is fine. It's above 60. So here the moving average crossover didn't happen. So if you have taken a trade here, see, you will be holding the trade till here, right? Somewhat till here. Okay. So the beauty of this strategy is it also gives you the proper exit price level. See, if you would have exited here, so here you wouldn't have made the loss, right? See here, from there it is completely into sideways to downside, right? So always remember one thing, friends: time is also money. Suppose, let's say, instead of exiting here, you're holding the trade till here. So till here, let's say, okay, the price level is same. Okay, it means you might be thinking you're not making a loss, but if you see here, close to 7-8 months, if you don't make money for 7-8 months, it is also dead allocation of capital, right? So exit is also very, very important. So always remember, entry and exit decides the fate of your trade, irrespective of your educational qualification, reputation in the market, or experience in the market. Okay, so this is how you can use this. So the rule is very, very simple. I'll reiterate once again: 5 EMA, 50 EMA, RSI. So when the 5 EMA crosses crosses 50 EMA from downside, if the RSI breaks above 60 on the same day, or one day before, or one day after, we will take the long trade. And for exit, we will look at only EMA crossover. When the 5 EMA crosses 50 EMA from upside to downside, if it closes below 50 EMA, next day we will exit. Okay. So this is the entry rules for positional trading strategy. I hope this is clear. Now I will jump into the BTST trading strategy. Okay. Now, for BTST trading strategy, I will be using an screener, okay, scanner from a charting website. Why? Because I noticed this particular screener shortlist the stocks in a wonderful manner. It shortlists the stocks for perfect BTST setup. Okay, and also you don't have to hit. You don't have any headache, right? You don't have headache of scanning the stocks. So this is very very wonderful. So that's why I simply explain this charting screen how it works, and then I will show all the stocks as per this particular strategy, and also I'll explain the entry rules and the exit rules. Okay, now what is the meaning of these are the criterias it uses, okay, to shortlist the stocks. So you can now click on this explain to get the information, but anyway I will explain. Okay, now what is the meaning of daily close greater than EMA? This is very simple, straightforward. The daily close should be above the 100 EMA moving average. What it means is they are using 100 EMA to shortlist bullish and bearish. So 100 EMA, if the close is above 100 EMA, means it is a bullish trend for the long term. Okay, so in this criteria they are shortlisting bullish long term bullish trend stocks. That is one. And second case is daily volume is greater than 5 lakh. So it means they are shortlisting only the active stocks. Okay, suppose there might be some operator stocks with 5,000 volume or 2,000 volume, 3,000 volume, or maybe within 50,000 volume. So they are removing the operator stocks. Okay, that is the second criteria. And see here, this is very very important, but it looks very silly, but it's very important. Daily close is greater than number 100. It means you might be thinking why it is necessary. It means they are shortlisting the stocks whose current market price is above 100. It means they are omitting, they are removing all the penny stocks. Most of the penny stocks, they operate in single digit, like 5 rupees, 6 rupees, or some penny stocks even go to double two digits, like 12, 20, 30, 40. So the idea of daily close greater than number 100 is to remove all the penny stocks. Okay, so they are removing operator stocks here, they are removing penny stocks here as well. Okay, now they are using RSI is greater than 55. As I said earlier, RSI 60 is above bullish, and just before the breakout, RSI comes between 55 and 60. Actually, I've noticed this thing. So, I don't know who developed this indicator, but they have done a wonderful job. So the idea of 55 is which is ready to give very good breakout in quick time. Okay, so they are using RSI indicator, 55 to shortlist uh, the stocks which are ready to give a good move in quick time. So that is RS indicator. Next is daily closes greater than 1 day high. It means today's close is previous day high. Okay, today's closes should be above previous day high. So this indicates the bullish momentum for today. That's also important. And they have added one more thing. This is very very important. Daily volume greater than the average of last 10-day volume into twice, which means suppose if the average volume of last 10 days is, for example, let's say 50,000. So what they are doing into number two, which means they are shortlisting, for example, 1 lakh. Okay, so what they are doing is if today's volume, okay, if today's volume above the last 10 days of volume into two, twice of the last 10 days of average volume, then only they are using this. So what it means is bullish momentum, it should be there today. Okay, so I don't know who developed this. Once again I'm saying this, they have used most intelligent parameters as per this strategy, and they have using this. Now don't worry, I will share the link of this screener in the description. You can use this. This is a free screener. Okay, you can use the screener uh, to shortlist the stocks. Now again, when I say BTST, there are two types of users. So some traders suggest to take the trade in between 315 to 330, because in India market closes at 330. So some people suggest to take the trade in between 315 to 330 and to close the trade on the next day. Next day anywhere between 9:15 to 3:30. Looking at the market movement, they suggest to close the trade. Basically, what these guys do is they try to take the advantage of overnight movement. Okay, that's also there. You can also do this. Okay, you can run the screener at 315 or 320. You can take the trade between 330. That's also good. Okay, that's also fine, there is no issue. Or you can wait until the market close, so then tomorrow morning you can take the trade. That's also fine. Okay, that's not an issue at all. Now suppose if you're taking the trade tomorrow morning, means then you follow one rule. Okay, let's say this is today's breakout candle, it came like this. Suppose you are taking a trade, long trade tomorrow. In that case, what you can do is you can take the trade only if the price opens or breaks above the high of this breakout candle. Okay, so this should be your entry for the long trade, and your stop loss should be just below the low of this breakout candle. Okay, so you can hold this is the entry and exit rules. I hope this is very very clear. And you can target 1:2 or 1:2.5 or maximum 1:3 risk reward trade. Okay, so this is the exit. I will be saying once again, you should have a proper entry rule, stop loss rule, or exit rule. Okay, you can use any of the exit rules based on your temperament, your trading skills, but always stick to one rule. Okay, you don't have to use my thing only. You can develop your own entry or exit rules, but you should stick to your own exit rules, okay, or entry rules, okay, for that particular matter. Now, uh, uh, let's say, suppose equity. If you're taking trade in equity, there is no doubt about it. It's a proper thing. You can invest maximum 10% of your capital per trade, as I said earlier. Now, if you're taking trade in option selling, you should know the hedging concept, right? You should hedge it properly if you are trading in option selling, because anything can happen in the market and price can display a big gap down open after 1 or 2 day, right, after your entry. That's also there. Suppose if you are doing options buying, you should not invest more than 5% of your capital per trade, which means if you have 1 lakh rupees, you should invest only 5k for this particular trade, for that option buying trade. Okay, and you should not buy weekly options. Okay, you should buy only monthly options, which means in stocks you should buy only monthly option. Also in monthly option, you should not take the last week contract, because time decay will be very very fast in the last week of the monthly option. So you should not take trade using the you know I mean, even in monthly options, last week, if it is last week, you should not take the trade. You can use the next month contract, but sometimes I've noticed volume and liquidity is little less in next month contract, so you need to do all those kind of balance. Okay, if you are an option buyer in this case. Okay, so now I think enough of explanation about this. Now I will go to this. See, for example, it shortlisted these many stocks, right? It shortlisted these many stocks. So you can check, or you can just place a cursor on this. It will show the uh, uh, you know stocks actually. So I would suggest these kind of small caps and mid cap stocks. I suggest only the large cap stocks like this BML or uh, you know uh, Bharti Airtel, like this. I suggest to use only large cap stocks instead of a small cap, mid cap. Definitely you will get good moves in even in small cap, mid cap. If you're trading in only in equity, then definitely it's fine. You can take trade in small cap stocks also. But if you're trading in options, buying or futures, then I suggest to trade only in large caps. Okay. For example, you can see Bharati Airtel. It's a clear cut breakout, right? See here. So I will go to trading view and I will explain. See, if I go to Bharti Airtel, it's a clear cut breakout actually. See here, it's a clear cut breakout, right? Okay. It's a clear cut breakout along with the volume. So I have not plotted volume here. So it's a clear cut breakout. You can take the trade. You would have taken the trade on that particular day in between 3:15 to 3:30 p.m. Or you would have taken that. You can take the trade next day once the price breaks above this. Or for example, I will check some other stock. For example, BM is also there. See, BML is also quite good. If you check here, BML. See here, BM is also, see, it's kind of trading the major swing high the next the previous one, right? For example, if I can draw a line like this, see this acted as a resistance here. I mean, gap down open, it can act, which acted as a resistance here. It acted as a resistance here, right? So that is there. And if you notice properly, there is a pattern. Okay, see here, there is a cup and handle pattern, right? There is a cup and handle pattern. So it's also showing the cup and handle breakout, right? See, this screener is very, very wonderful. Okay, it catches very good stocks actually. Okay, so right now I'm not supposed to share the recent stock information, so I will be uploading this video after few days, so you will not get this breakout. Okay, by the time you see this content, it will be, after few weeks. So but in the long run, you can use this screener, and you can take the trades on your own, right? For example, if I look at some other stocks, for example, Mahindra and Mahindra, it is there. This is okay. uh, Bharat Electronics Limited, I think it's BAL. BAL is also quite good. See here, for example, if I go to here, okay. So BL is also good. See here, BA is at all-time high. It displayed some consolidation and it is ready to move up once again, right? See, BL is also good. Reliance is also there, okay? So Reliance, can we check Reliance? Okay. So Reliance is also, see, wonderful breakout, right? See, it is displaying wonderful breakout, and it is also a cup and handle format, right? Suppose if I draw a line like this, excuse me, if I draw a line like this, it is also a cup and handle format, right? See. Okay, so it is also ready for very good breakout, right? So this screener is very wonderful, and it shortlist stocks like anything. Okay, so you can use this BTST screener to shortlist your stocks. I will check one more thing. For example, SDFC life insurance is there. We can also check this. It's okay. SBI Nifty 50. Okay, these things are okay, average. Okay. Uh, if I come here, I don't see anything else, any good other stocks, especially under the okay. Here it is not there. Okay, I think this is fine. Okay, so that's all I wanted to cover under the BTST trading strategy. You can use this screener. I will share the link in the description. Okay, so now it's all about intraday trading. Okay, so when it comes to intraday trading, mm, okay, it's all about intraday trading now. So in intraday trading, I will be you explaining initiative buying, initiative selling trading strategies, which is works well for equity trading, for position. I mean, for options buying, option selling, and even for futures trading. Okay, so basically the rule is very simple, friends. So you will have the previous day high. Okay, so you will have previous day high and you will have previous day low. Okay, so this is the two important things. So these two levels plays a very crucial role. So let's say this is yesterday's trading range. Okay, so what it means, the previous day high means is this is the price level where the last buyer present, right? Okay, there were no buyers above this price level, right? Also, this is the price level where the strong sellers entered the market, right? Correct, right? Which means this is a seller zone. Okay, and what this indicates, previous day low, it indicates this is the price level where the last seller were present. Below this there were no seller, right? Or this is the price level where the strong buyer, you know come to the market, right? Which means this zone belongs to the buyers. Okay, now suppose, let's say the market closed here. Now the price opened here exactly very close to the previous day close, which means there is no change in the overnight market sentiment. If there is a gap up or gap down open, if gap up open indicates bullish sentiment in overnight market sentiment. If there is a gap down open, bearish market sentiment in overnight market, right? So if the price opens exactly at the same level, so what this indicates is there is no change in the market sentiment in the overnight. So there is a high possibility of price trading today also within the same zone if nothing happens in the live market. Which means, let's say if it's trading here, if there is a war between two countries or earthquake happened, or if there is a some bearish news, then the market will fall. Okay, unless nothing happens, so there is a high possibility of price trading in the same level. Okay, suppose this is one concept. Suppose if the price instead of opening here, it displayed an open here. Okay, so what this indicates is there is a bullish market sentiment overnight. Overnight pay something happened which is bullish uh, to the market. Okay, and after that, if it can, if forms a candles like this, okay, like a bullish pin bar, iron hammer, or bullish engulfing, like for example like this, it forms a bullish engulfing, or it forms a bullish marubozu pattern like this. Okay, this is bullish engulfing, this is a bullish marubozu. If it forms a bullish marubozu, so what this indicates is uh, even though this zone belongs to the sellers yesterday, but overnight market sentiment has changed to bullish, and open action is also suggesting the bullish thing, which means we don't know what happened in the overnight, but overnight bullish market sentiment changed to bullish, and especially at the open action also bullish momentum is continuing. Okay, that is the thing. Now you can use one small technique to shortlist the stocks. Okay, so you can plot VWAP. There is an indicator called as VWAP, volume weighted average price. So basically VWAP, there will be one major VWAP line, and another one is the upper layer, and one is the lower layer. Okay, so now what you can do is, if the previous day closes above this VWAP line, okay, if it is above this line, that's very good. But if it should be above this particular line, okay, VWAP line, then only shortlist those kind of stocks for the next day price action. That means there is a higher probability of taking giving a very good move on the upside. Okay. Now I will show some examples. Okay. Suppose if I go to Reliance, so Reliance only, I will plot VWAP indicator first. This is the indicator, volume weighted average price. If you plot this indicator, basically it plots three lines. Okay. See here, for example, okay, in Reliance it is not there. So because the close is below this lower line. So what I do is I'll highlight the VWAP line to increase the thickness. Okay. VWAP line, I'll change it to black. I'll change it to this. Okay. Now it is clear. So the price should be close above this line. Okay. So now if you check some of the leading stocks which gave good movement on this particular day, for example, if I come here, let's say Geo Financial Service, if you check here, let's check Geo Financial Services. Okay, here also it is not there. The price closed below. Sometimes it happens, that's fine. For example, Bharti Airtel Trent. Bharti Airtel. See here, this is a very good breakout, right? See here. Oh no, I think this is also a previous day. It's closed a little bit below the view plan, so it is fine. Okay, Trent. Basically, it is showing the close. Why? Because previous day when I'm recording this video, one day before, the Nifty closed below this. Okay, see here, this is yesterday. This is day before yesterday. Day before yesterday, Nifty, the last candle especially, it's a big red candle which closed below way up. That's why you can see most of the stocks also below this. Okay, that's why we are getting like that. So don't worry. Every day it's not happen like that. For example, in Bell, I'm quite sure it's open on the upside. No. I think here also it closed a little below VWAP line. So I hope you're getting my point, right? So what I'm trying to say is, so whenever you see the VWAP line, see here, for example, in this case, VWAP, the price closed above VWAP line, right? The next day candle broke above the previous day high. So our entry will come above the high of this candle. So we didn't get the entry here. So that's why there is no question of hitting the stop loss here. So our entry comes above this. So you would have taken a trade here. Stop loss will be, this middle VWAP. So you would have taken a little bit profit, right? See, for example, I will go to TCS stock. Okay. See here, for example, in this case, it's a very, very big candle. You would have missed the trade. See here, the price is closed above VWAP. It is it comes under our setup, but the open candle itself is very, very big. So usually whenever you get a very big open candle, like 2-3% candle, you can ignore the setup. So look for some more example. I think in TCS I'm unable to find it. It's a huge gap. So huge gap also you can avoid, or you can take above this. But whenever there's a huge gap, there is a risk actually. I will go to, for example, Titan. Titan is also good. Mm, in Titan. See, for example, in this case, see here. So the price closed above the VWAP upper line, right? See here, this is a VWAP line. This is the upper layer of VWAP. So price closed above the VWAP line. So this is the previous day high, right? See here, the price in the first candle, it didn't traded or broke up above previous day high, but this candle did, right? So your entry will come above the high of this candle, keeping a stop loss below the low of this candle or VWAP line. So you would have made little profit. Uh, Huge gap once again. Huge gap we avoid actually. Here also huge spike. So whenever you get a huge spike, always avoid those kind of stocks on that particular trading day. It is not really necessary, right? Okay. See here, there is a entry here. I mean, again, it is spikes on both the sides. Even if you would have taken a long trade above this high, because it satisfies the breaking of previous day, you would have made little profit. I mean, personally, I don't suggest to take this kind of trade, even though it comes under our setup, because we need to use little discretion, right? Uh, See here, this is a wonderful, wonderful, wonderful setup. See here, the price closed above the VWAP line, right? Previous day, price closed above the VWAP line. So next day, price broke above the previous day high, right? So our entry will come above the high of this candle, keeping a stop loss below the low of this candle. Once it starts, okay, you can use this VWAP line for your stop loss. Okay, see, you would have made very good profit, and it's a very good trending day. You would have made very good profit, right? See, whenever, I mean, I suggest to monitor 4-5 high beta stocks like this, where you find very good setup. Only take trade in that particular setup. There is no need to take trades in 3-4 stocks, right? The 3-4 trades is not really needed. Only one good trade is sufficient enough per day. Okay. Uh, See here, there is an entry here as well. This you might look like a bearish candle, but the price closed above VWAP line in the previous day, and previous day sentiment is bullish. Even though this candle looks like bearish, but 50% is buying, 50% is selling. So you can plan to take the trade above the high of this candle. Okay, you would have got that, taken the trade here. Now stop loss is this. You would have carried till the end of the day with good profit, right? Uh, Okay, I think that's all for today. So the negative part is very simple, friends. Let's say you are looking for a short trade because it's intraday. Short trade is also a very, very simple thing. So this is previous day high, and this is previous day low. Okay, this is previous day low. So you will have a VWAP line, right? This is, let's say this is VWAP line. This is VWAP lower line. This is VWAP upper line. So previous day close should be below this VWAP line. Okay. So this is a bearish candle. Okay. So previous day close should be below the VWAP line, or should be below the lower line of the VWAP. It is holds good. Now price opens at or below previous day low, and it forms a bearish candle like this. Okay. Okay, like a bearish pin bar, or a big bearish pin bar like this. Okay, this is a bearish candle, or it forms a bearish engulfing like this. So this is just the second candle is a bearish candle, or it forms a big bearish marubozu candle. Okay, this is a bearish candle. It looks like this. Okay, so whenever this kind of pattern appears, you can take a short trade below the low of this candle, keeping a stop loss below above the high of that particular breakdown candle. Okay, that's how you can use it. We can look at some of the examples. I hope we will find some examples. If you go here, losers, for example, Bajaj Auto. If you go here, if I go here, Bajaj Auto, There's a huge gap, so we don't take a trade whenever there is a huge gap like this. So it's okay, it's fine. Euro Motocorp, I think Euro Motocorp also would have displayed some gap down open because auto sector. Hero Motocorp. Okay, here it's I mean very good movement on the first candle itself. It's a huge buying thing, huge fall and then buying. So if it have taken trade, it's very difficult because we wait for the first candle, so it is fine. But if you check generally, if I check generally, okay, general. See here, it closed below VWAP line. Okay, on the previous day, the next day candle, it didn't broke the previous day low, but it is a bearish candle. If it have taken a short trade below this, your stop loss should be above this. Otherwise, it's fine. Uh, for example, here also there is a trade, but it didn't give very good profit, but it's complete sideways. You would have made little profit. That's fine. Uh, so in this case, there is no trade here because the price closed above the VWAP line. I think here there is no trade because price didn't break the below the low of this candle. Uh, I think there is a trade here. See here, previous day closes below the VWAP line. So first candle is a bearish candle with slight buying wick. You know, your entry will come here. You know, below the low of this candle. So in the last, one or two candles, it gave a very good move on the downside. Okay, we look for some more example. If I go to Reliance, okay. Mm, Open candle itself, it gave a very good move. Here also the same story. Okay. Uh, Here there is no entry because previous time VWAP closes above the VWAP. Here there is an entry, but it didn't move much. So either a small loss trade or a small break even trade. Here is okay trade. The price closed below VWAP line, the closer lower line yesterday, previous day. So open candle is bearish, second candle is also bearish. You would have taken a short trade below the low of this or the low of this. You would have made a decent profit. Okay. Uh, Okay, anyway, Reliance is a very bullish stock. It is not a good idea to check for a short setup. There is one short setup here also. It gave very good move in two candles itself. Okay, uh, that's how it works, friends. So I have covered three important trading strategies or wonderful trading strategies in this video. Do you need any in detailed videos like this? If yes, you can comment below. Also, do you want me to cover any other important topics in trading, be it intraday trading, BTST trading, or positional trading? I'm happy to make a dedicated video on those topics. That's all for today, friends. I hope I added value to your time. Uh, if you think yes, you can share this content with your friends so that they will pick any one of their favorite trading strategy. We will meet in the another video with another useful content like this, friends. Thank you. See you. Bye bye. Trade safe. Enjoy.